Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today, we're going to be looking at an industry that I've been having questions about, and maybe you have as well, and that is the travel industry. Ever since we had the COVID, we had travel stocks, cruise stocks that got hit pretty bad, but that was about 4 years ago. I want to see where we're at today if we have exceeded pre-COVID levels and just really get a peek into how healthy this particular company is. I'm going to go ahead and shrink my head, not my screen. Any guesses on what this company is? I'll give you 2 seconds. Okay. Expedia, you were correct. Okay. So obviously right here is where we had the COVID and it went all the way. Expedia went down to 91. It's trading at 149. We're going to see if the stock deserves to be 149. We're going to see what institutions and hedge funds are doing. We're going to be doing some in-depth charting and analysis, and that is XPE. We'll look at Thinkorswim for supports, resistances, potential patterns, etc. So we've got Expedia on deck here, and it looks like my patterns are playing out currently. So without further ado, let's go ahead and hit the subscribe button, leave a comment, thumbs up or thumbs down, and let's dive into the video. If you don't know already, I like to look at the bigger picture, so the monthly, and then whittle my way down. On the monthly, the strength is with the bulls, which means it's bullish, which means optimistic, which means the stock is going up. The momentum is with the bulls. Money flow appears pretty flat, but we're going to go ahead and see what institutions and hedge funds are doing because FinViz does have delayed data. So whatever we see on FinViz is not exactly up to date and accurate. And so we're going to see we're going to see a website that is up to the day. And our relative momentum indicator is at a 53, and it looks like we're not done yet. Back in what year was this? 2013 all the way to almost 2018. This was hotter than hot. And we're not there yet. That is a 5-year run of being a really hot stock. So diving into the good stuff. So first thing I'm going to call earnings per share. Obviously going from huge negative here, that was the COVID. And we're going up and to the right, which you can see here. That's fantastic. Our sales, again, this was pre-COVID and then post-COVID, a huge drop off. And now we're up and to the right. 2023, there was 12.8 billion in sales. As of 2024, the trailing 12 months, we're at 13.26 billion. 2024 is on track to beat 2023 and pre-COVID. And shares outstanding, we're down to 137 million shares in 2023. 2024, we're down to 131. So we are seeing the natural and organic accumulation of shares by big money and little money. Little money is retail. It's not people with a little bit of money. Okay. Let's call out the good, bad, and the ugly. The good is they're profitable. That's good for them. The quick ratio, this is kind of ugly. They're under 1, which means anything under 1. If Expedia were to close their doors tomorrow, they would not be able to pay off all of their debts. However, speaking of debt, they're currently at a 7.37, long-term 6.2, which means they are actually addressing the debt. So that is actually a good sign. EPS past 5 years is positive 14%. Sales past 5 years, 12%. Again, that goes to show their resiliency. However, we also want to take into account they did get smacked pretty hard during the COVID. So even accounting for that, they did pretty well. Institutions own 93%. Again, FinViz is older data. It's not as up to date as Fintel, which does have up to the day filings. Gross margins are 82%. That is insane. For every $100 they spend, they're getting $182 back. That is fantastic. They're profitable. Shares are going down. Volume is great. So one thing we got to just take a look and ask ourselves, because this is what I thought in my head. The stock was at all-time high in 2022, and that was due to, again, the COVID downturn where the stock went down as low as $40 and went as high as 216. It was obviously pent up buying demand. Uh, is the company doing better than they were in 2022? 2022, 11.67 billion. Yes. 2022 shares outstanding 153 million. Today 131 million. The company's doing better in terms, I mean, look at their gross margins. 82% is absolutely phenomenal. They are profitable. And one thing I also want to call out, this is probably the needle in the haystack here. Their PE right now is not attractive, but good thing we have that vision, right? We look into the future, but we also look into the past and we look at the data points we got. Their forward price to earnings is at a measly 10. That means if Expedia stays how they are today, without improving, without growing, same sales, same EPS, same margins, same profitability, this forward PE is at a 10, which means this is something Warren Buffett would be buying if the PE, if this was today. So we need to drink some water. I'm glad we could share that moment together. So this is looking like a steal of a deal if you think Expedia is going to continue. I think the stock will continue to rise because the strength is with the bulls. And I mean, the stock, I mean, it's trading at the same level as it was back in 2017. And was this company doing better than they were in the 2017? I'm going to venture to say yes. So again, we're looking for a nice breakout here just based off of this. Let's go ahead and run my projected stock price calculation. Oops. Really quick. And this is going to tell us, I already have it open. This is basically going to tell us if Expedia is projecting to go higher or lower. So we have a market cap of 19,410,000,000. Income positive 808. Hawaii. 808 million, correct. And sales of 13,260,000,000. Fantastic. Now we're going to go down to the cash and the debt. All right. Really quickly before we look at the cash and the debt, Q1 2024 they did 2.8 billion. Q1 2023 2.6 billion. That is over a $224 million increase. Good for them. Q2 2024 they did 3.55 billion. Q2 2023 they did 3.35 billion. That is again about a $200 million increase. Good for them. And then profitability is right in line again, exactly where we think it'd be. So that is fantastic. Insider selling. I mean, there's no real red flags down here. So back to our calculation. All right. They have $8 billion in cash. That's the most cash they've had since 2023. Okay, since last year. I was going to say, geez Louise, mamacita. Cash, 8,393,000,000. Okay, debt they have 5,510,000,000. Okay. Let's just do a quick little peek. Total assets 25.8 billion. Total liabilities 23.7 billion. So they have about a $2.12 billion buffer. Has this gotten better since 2022? Let's see. Assets. Kind of not really. Not really. However, I do want to call out their debt Q1 2024 was 6.5 billion. Now their debt Q2 2024 is 5.5 billion. They spent $1 billion on their debt in one quarter. Cheers, that's insane. Right? They could not, if they continue that trajectory, They'll be debt free in 5 quarters. That's wild. Okay, back to our calculation. Shares outstanding is 131,520,000. That gives us a potential stock price of $276. I'm gonna take that all day, baby. That would be a new all-time high for this company, and I believe we'll probably see that. I think we'll see that. Year to date, the company's down 1%. Performance for a year is 48%. So really quickly, I do just want to touch on this. If you want to own Expedia as a single stock, you have to be aware that it will be volatile. For example, if you would have owned Expedia from September 29th, 2023 to today, you're up 48%. That's huge. But if you owned Expedia January 1st, 2024 to today, September 29th, 2024, you're down 1.78%. Now, if you want to have exposure to Expedia and have it be a part of a uh, ETF, look at the S&P 500. That is a that's a fund with 500 top stocks in the US. The S&P 500 year over year is 10% on average every year. 2024, I think they're up around, it's up 20% this year. So if you don't like volatility or risk, I would say S&P 500 every day. But if you want those big swings and you believe you're a big believer in Expedia, consider owning a single stock. So it really just comes down to your risk tolerance. So you have to figure that out yourself. Okay, so based off my price projection, that puts Expedia at over almost almost 100% gain. Institutions own 93%, but if they see the value that I see, they're going to own more. So, and Expedia owners own 112%. That is almost 20%, a 20% positive change. That is humongous. Vanguard and BlackRock decreased earlier this year, and I'm guessing they are upset about that because I would be too. So institutions and hedge funds are buying almost 20% than what it's showing in FinViz today. And again, Expedia, today's the 29th, Friday was the 27th. We can see the 27th here is the last filing. So pretty good stuff. Now let's look at a little bit more advanced stuff, charts. So what we're looking at here is essentially, I don't know when I drew this. However, look at how this stock came down during the COVID times and tested my supports. That is insane. And I'm going to go ahead and do this as well. Let's see. Ooh, right there. Okay, so the stock has never, ever, ever broken above this blue line that I'm touching here. And if we continue on this current trajectory, let's go right there to, geez, let's keep it tight. Let's keep it tight. Right here. Okay. So I think a near-term target for Expedia is gonna be $163 in October potentially. I think we see a lot of resistance right here going into 2025. However, once we do break 167, I think this is heading up to 263. What was my price target? 276? 276 would be right here. This will be October, November, about December of 2026. So that's I'm just going to put a little bubble here. So when we look at this in a few months, we'll see that. I mean, it could get there earlier, but that's what we're looking for and tracking. If Expedia does have a horrible month, bad PR, etc., we could see another test of 113. However, I think that's highly unlikely because this stock is undervalued. these green bars down here show there's a lot of demand. I mean, every time it touches this line, it gets bought up quick. So I'm optimistic and bullish on Expedia. I think this goes much higher. In fact, I will probably be looking to buy some. And the reason I want to buy some individually rather than the S&P 500 because 2024 the stock has underperformed. We're going into 2020, we're ending 2024 and the stock may be zero, like it may not have gone up or down. And we can see right here, January right here. Again, the stock was 151-ish and now we're at 149. Again, I think we have huge momentum on the monthly. So I'm a buyer of Expedia most likely in the next coming week or two. So those are my thoughts. Just quick summary. Institutions and hedge funds are buying. That's important. Forward PE is a 10, literally 10 point something, not a 10 out of 10, but it's literally 10. So that means it is extremely undervalued looking ahead, which is fantastic. Gross margins, 82%. Are you joking me? Who can get 82% gross margins off the top of your head that you're thinking right now? Exactly. This is a beast. This is a monster. They're paying off their debt. They paid $1 billion of debt from one quarter to the other. That's a boss move. So I like this company. Let me know what you guys think. Let me know if you think I'm crazy because it's okay if you do. Let me know if you took a water break when I took a water break. Thank you for watching. See you later. Bye.